Hey, this is Coach Mike. Gonna give a little bit of a easy to apply applicational use type deal with Fibonacci extensions. Now, I want to first start by saying, Fibonacci extensions, they are a 3-point tool that helps you with non-linear targeting. It's basically, if you can think of it like this, it works well on stocks where you can see the replication by the size of a move over and over again in pre-existing charts. So I'm going to start out here, and you can find this tool. What you see in here with the recording is Thinkorswim, and I'm going to go into drawings and select Fibonacci extensions. Now, this first set I'm going to put on here, I'm just going to enter a weird little thing to show you something else with the Fibonacci extensions themselves. What I like to do with it is, when it first comes up there, yours might look different than mine. If you right click it, go to edit properties. For me personally, I really only start by using the 0 and the 1 line. So if you select only those and then hit save as default, that'll make sure every time you use them, they look like mine did. So anyway, I'm going to be starting here on a point with Baidu. It just happened to be a chart that I use Fibonacci extensions for regularly, and I actually just went back to a random time. I selected a 180-day 1-hour chart, and I basically just zoomed in on it and gonna walk through. One mistake I think people make a lot when they try to use Fibonacci extensions is they do a little bit too much of what I call playing the red candle, green candle game instead of more of a visible up or down move. What I mean by the visible up or down move is, you can have red and green candles while a stock is making a move in a specific direction. Now, as you start to get a move, you're going to pick 3 points of which to be using to mark for either a move downwards or a move upwards. Where I'm starting at here, I'm going to be marking points for a move downwards. So I want to use a high, a low, and a high. Now, the first thing that's probably going to come to your mind is, well, that wasn't very good. You were short on your target. You could have gotten a lot better. One thing I want to remind you a little bit of when it comes to trading overall is that it's okay to exceed your target. What you don't want to do is miss your target. So by getting an idea of a target point, it allows you, like with options trading, to pick a strike, because you'd want to pick a strike that would go in the money at the time of your target. So, if I started this and my initial target point was 216.04, I wouldn't want to play any strike that was lower than that price, 216.04. Because if I were to fall shy of the target and begin to move the other way, I would actually have a greater risk on a bounce with options that were not in the money at the time of the bounce. Now there's 2 points I want to mark here. You guys can probably clearly see you had obviously an excessive up move, a drop from it, a little bit of sideways, and still a drop. Now when you look at something like that, to me, I look at something like that as that being one down move before it actually went up again. And again, I would want to mark target points accordingly. So what I'm basically looking at is, as that next day went on here, when you gapped up a little bit, and then you started going sideways, and then all of a sudden you get this little evening star pattern. I guess I should say too that, with any type of trading, you've got the people that don't know hardly anything about trading that insist that they could buy the low of something and sell the high of something all the time. Anybody with any experience would tell you that's not going to be probable. So wait for a little bit of confirmation. But as you started to get this confirmation to use the high point, the low point, and the high point that I used, would allow you to then look at 112.91 as your target point. Now what you see here is as it began to fall and kept falling, even though it put a little wick just below my target price, we actually kind of based right off of it. This would be another time that I would view the system as successful for trading. Now you could also use this for both shorter term and longer term. We can see if we go back to the beginning of the chart, a clear down move and then a clear up move, by which we could actually have multiple targets, which could lead to actual multiple trades. And what I mean by that is here at this time, if we were to take a trade for this 212.91 target, we may have already taken a trade as this fell, consolidated, and broken below the consolidation for the 210.25 target. One thing you don't want to make the mistake of doing is either A, selling both of those trades when it hits only one target and starts to move the other way, or B, not selling the trade you took for this target when it hits the target. Again, here in this case, you see that we would have had a successful opportunity on trade 1, and we can then see a visible down move and a visible up move. As we progress, you see again, this target point would have been met, would have been another successful trade. And as we continue with the down move, the first thing you're going to say, and I went just a little bit too far, is it looks like you fell shy of your target. Well, one thing I like about trading, and you're not going to hit your target every time, but if you study a system on a specific chart, you will be able to have an idea of the percentage of times it's accurate. And before you should ever trade that system on that chart, you would want to already be impressed with the accuracy of the system. Me, for one, am very happy with Fibonacci extensions on Baidu, and because of that, I'll always hold to my target. Now you can see that as it started bouncing, some people might get a little emotional and a little bit scared. But if you hold to your target, here you go with what is actually another successful trade. Again, after being successful on this trade and really having no reason to trade the long side, you may have actually seen as it started to make an up move and began falling that you would have had another target to trade for. And as things continue on, you'll be able to get an idea as to whether there would be any more success to that system. And there you go. You'd actually right here get a gap down below it, which again to me is target hit. It's not about target exceeded. It's how often can I at least hit my target. Exceeding your target's just a bonus, so long as you have the courage to make the trade. As things progress and continue to progress, you start to see a time when, oh shoot, well, if I look here, as I was waiting for an up move, and maybe right around in this area, had expected to be able to start to see a down move with continuation to take the short side again, we all of a sudden jump in a way that looks a little bit bullish. Now, a lot of people will miss a lot of trading opportunities because right here they'll say, well, I can't buy that. I can't buy that. It's already $10 off the bottom. Well, if we take a look at this, we already have another visible up move from this low to our high here, and a visible down move to our low here, producing again another target point, this 221.16. Now the important thing is whether or not we hit the target and the number of times we hit the target. So as time kind of progresses and you now see that we've started a little bit of an up move, we start to see times when, I thought it was going to pull back a little more and now it goes up. Well, it's not too hard to take our Fibonacci extensions, mark the up move and the down move, and now produce a secondary target, which in turn is really a second opportunity for another trade. And as you're in the chat room and stuff, you'll hear me say regularly how much I encourage making multiple charts or trades on the same chart. Again, as things kind of progress, you get a little sideways movement, but one would have to say right through this area what is really looking like another clear down move. Now, the first sign you get of something that may have bounced off of it, you again get the opportunity to use your Fibonacci extensions to produce a target like this here at 218.86. And again, see if we get any accuracy in the target by using clear, definitive up and down moves. As this chart progresses, what you see is not a clear up move or a clear down move. You see a clear sideways move. Now you can really try to nickel and dime things and overtrade it. And chances are you'll be like most that go broke from a severe case of overtrading. And that's not what we want to see. What we'd want to see is if that bottom level holds, which as you can see here, it does not. It does not, which really starts to lessen that chance that we would hit this target. Now, I'm one that would like to tell you that in a case like this, you'd want to see if you get continuation from it. It's close. It is close. But what this actually could have been is mismarking of what you originally thought was a down move, but that could have ended right here. So with that, we're actually going to delete this set here, and we are going to mark again off of this low, this high. We're going to come to that new low that was made. And you'll see the target point is very, very close to what the old one was. This next day, oh wow, we start to get a gap up with what could potentially have been 3 different trade entries that we had made that we're still awaiting the target on. And if you remember, throughout this down move, we had hit that target several times, actually every time that I had put it up there. So as time passes through, now you see what is clear. This day here gapped up to open. It gapped right into your target. You sell this trade. And then subsequently, after it hits these points, you make those sells as well. And what you start to find time and time again with a stock like Baidu, and you see after it exceeded that target, it very quickly, oh, hey, I got a little bit too high on it. It's time to come back. But with a stock like Baidu, you regularly see the opportunity to hit your target. Will you hit your target every single time? No. Will you hit your target the majority of the time and in a way that, should you trade every one of those times, gives you the opportunity to profit regularly and profit more than you would ever lose using the same and consistent position sizes? Absolutely. This is just a little look on Fibonacci extensions, the use and application on a chart. Just happened to be Baidu's chart, but you would actually look and consider to use them the same way on any chart you apply them to. Remember, it's not a game of individual red and green candles. It is a visible up and down move that you need to be patiently watching and marking as it starts to move in the other direction.